Investors and traders, welcome to the channel. Market chart pattern today is 2nd of May 2025. Hope everyone is having a fantastic day and beginning to a tranquil, peaceful weekend. So we'll take a look at the key US markets in this video segment. I'll try to cover the dollar, the bonds, and the gold and silver. And then for the video for Sunday, we'll take a deeper dive into the stock indices and also cover the sectors as well that we haven't covered for in quite some time, so it's important to do that. As always, this video is for educational purposes only. It is not a financial advice. And if you happen to like our technical analysis in the video, then please do subscribe to the channel. It really just encourages me to keep on producing more content and educational content for you guys. So thank you very much for that. So let's start by taking a look at the dollar index. So what we have seen in the dollar index is actually trying to or making an attempt to rally. However, what is really important is, let me actually move over to the weekly chart, that it is holding the 99 to 98 support zone, which is really important. Let me delete this one because the market actually reached that target and went a little bit below as well. So it's trying to or making an attempt to hold this. However, it does look like these are two consecutive weekly closes, uh, positive closes. So this is really good because we haven't seen that ever since the market started to break down since 3rd of March. We haven't really seen two consecutive positive closes in the US dollar. In fact, we haven't even seen that ever since the top was put in 13th of January 2025, so from the beginning of the year. So that's a really interesting thing, two consecutive bullish closes for the US dollar. So the dollar is gaining some strength. Now the question is whether it is just a bounce or is it a more than a bounce. So I think over some next week, I think it should really help us to get further answers for this question. But on the daily chart, what we are looking at is the market bearish symmetry is still in play because this is the largest rally that we have seen. You can see this one. So let me actually put it right here. And this one was the largest rally, and then this one was the next largest rally, which was equal in magnitude, and then we have the next one, which is also in equal in the magnitude. So if the market actually is getting stronger and is able to get above this level, and then what it indicates is that the bearish symmetry is breaking. So this pattern which has existed, that the rallies are getting sold, there is a change coming into it, and this is when it becomes more interesting. But right now, giving the benefit of the doubt to the bearish symmetry, I think we are looking at it more as a bounce. But two weekly consecutive positive closes for the dollar is something to make a note of. Now, let's start by taking a look at the treasury notes. So we start by taking a look at the 2-year treasury note. A little bit to my surprise, actually, what we are seeing is this market actually rally or the yields move higher for two consecutive daily closes. So that is really interesting because I was of the opinion that we are likely in this blue CD leg lower, which I still think is my opinion. But we have seen a nearly 10% rise in the 2-year treasury note yields over the course of last couple of days, and I think that's at the back of some of the economic data that came out on Thursday, and then also today we had the non farm payroll come out stronger jobs. So it was a little bit surprising to see the yields rise because stronger jobs perhaps would have indicated that Fed might not be too aggressive in rate cuts, but looks like the bond market is telling something or is reading something different. So we have seen two consecutive daily closes. Let's see how the third day will be. But if we were to go back right here, and I'm going to take this swing because this is where it failed. So what we have is basically a failure of a failure is a swing, or in other words, it could be a pivot. So let's take that, and I'm gonna put the 38.2% retracement, and it's right here, a little bit above that, above the 38.2% retracement. So if it begins to get above this, I think this is when maybe it's got a chance to accelerate and test these highs. But right now, let's keep on watching the 38.2% retracement. So yields rose for two consecutive daily basis. Could it be a double bottom right here? And we see an A, B, C, D, where the market is rising somewhere in this zone. We have to wait and see. But right now, 38.2% retracement. I'm watching that. Then let's take a look at the TNX, which is the 10-year. Regional look again, two consecutive daily close. In fact, three. So this is something we need to pay really close attention to. Um, and the whether it is an A, B, C, D, we begin to see the test of the upper range, or I am of the opinion we are actually in A, B, C, D to the downside, getting a little bit of a tricky situation. But here, what we are looking at is this market found support from the 61.8% retracement right there, and it is rallying. Let's see how far it could go if we just take this. Yeah, 4.42 is the 61.8% retracement. It's got a chance to go and hit that, so we'll have to wait and see. Then let's take a look at this on the futures contract. So this is what we were discussing the other day in the video, that this market was actually had this ABCD come in and also right at the 61.8% retracement. So it was expected so for the yields to rise, and we have seen that. Now the question is really whether it's just going to be a 2 or 3 day retracement and we begin to move higher from here, or whether it's going to take up this swing, which is the 24th of April, and then the situation is going to change. Then this means that it was ABCD of the corrective nature, and we are going to be in ABCD to the downside right here. And now let's take a look at the Treasury bond futures. This is again something what we were discussing. The market was forming this ABCD in the shaded region right at the 50% as well, and we have seen two, in fact we have seen three consecutive daily base closes to the downside. This is rather interesting because three consecutive daily closes negative is not something that we have seen in this move higher. We have seen two daily closes. This is three. So let's watch this space very very carefully. So the bond market kind of giving mixed signals, more of a trading range, but some of the levels that we are watching, especially shorter on the curve, do suggest the yields are likely to move lower, but we are stuck in this range bound behavior at the moment. Now let's take a look at what is happening with the gold market. Here we go. So the gold has declined quite a bit. It came down as low as about 8.5%, which is a larger decline than what we saw before, which was 7.23%. And it appears to be stalling right here. Maybe it begins to start its ascent from here, but it's also, if we just take a look at this on the longer term basis, this is where the month of April closed. It's got a high wick. It's got a wick at the top, a wick at the bottom. So not a very strong kind of candle. So it does appear that perhaps the gold is actually weakening its ascent. Or look at this parabolic rise. We do have a higher target of about 3640. Whether this market in May will reach that, we'll have to wait and see. But on the daily chart, what we see is basically, if we just draw a retracement like this, it's still got a chance for 3,177, which is 61.8% retracement. Also the structural support right here, and maybe this is where it begins to consolidate. So very narrow range behavior, almost unchanged today on Friday, which is really interesting for the gold market. I think I'll do a special report on gold and also include the silver market as well. Let's also take a quick look at the Euro USD, and here we go. So the Euro USD is also it has pulled back as we discussed on the dollar index. The dollar was strengthening, and here we're just seeing some consolidation coming right at the 38.2% retracement. Now the interesting thing is the market tried to rally, but the sellers were just waiting right here, and the market was sold. That is really interesting because if the rallies get sold, then if the lows are broken right here, then we could have a continuous move to the downside on the weekly chart. While the dollar made two consecutive weekly positive closes, the Euro USD, which is about 52% of the dollar index, made two consecutive daily bearish closes. And we also, of course, have this ABC right here. So that is also part of the reason why we have seen this pullback on the GBP USD weekly chart. This market is pretty strong, but it's also kind of in the region where we have this double topping, and the market closed, so it's possible we could see further downside in the British pound and on the Japanese yen. Here we go, and the Japanese yen is right at this triple bottom formation, and if the dollar continues to strengthen up, then we are likely to see the US JPY rise in strength, and which will have some implications on the yields as well, because we have seen this correlation happen when the Japanese US dollar versus Japanese yen is strengthening. Then we have seen the yields actually move higher. So whether that sort of correlation is coming back, I think I'll do further analysis on that, but that could be possible. But if that is the case, then the US dollar is likely to strengthen up, and it will also have some impact on the gold prices as well. This is pretty much what we have covered. We covered the interest rate markets, the shorter end of the curve, 10-year treasury note, long bond futures. We covered the dollar index, the major currency pairs, and then also the gold market as well. So I'll be back again with a new video with regards to the equity markets and equity indices, in which we'll cover some of the international indices such as the Bombay Stock Exchange, the Hong Kong market, the European markets, German DAX, and FTSE 100. And FTSE 100 has been really interesting because just making new records. And then we'll also cover, of course, in detail the US stock indices. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.